to our special series on ETFs, Insight into ETFs, powered by Mirae Assets. I'm your host, Pallavi. Today's session is going to focus on global investing. I'm happy to be joined by two of our experts, Mr. Siddharth Srivastava, Head ETF Products, Mirae Asset Investment Managers, India Private Limited. I'm also joined by Mr. Will Tu, Asia Pacific ICE Data Services. Will has over 10 years experience in the asset management and banking industry. His main focus is on areas in asset allocation, performance analysis, risk assessment, and derivative pricing. Welcome both of you.
Thank you, Pallavi, for
Thank you.
So before we get into the benefits of global investing and what is this whole thing about, the whole buzz about global investing, let me first quickly come to Siddharth. Siddharth, are Indian investors missing out on opportunities which are outside the Indian ecosystem? What do you think?
So basically, if you look at Indian equity markets, it's only 3% of the global equity markets in terms of MCAP. And it is dominated by traditional industries, like we talk about IT consultancy, we talk about banks, we talk about oil and gas, among other sectors. So there are a lot of interesting things which is happening globally, especially in disruptive technologies. A lot of interesting thing happenings on the side of EVs, on autonomous vehicles, on cloud computing, etc. And most of these themes aren't present in Indian equity market. Mm-hmm. So any Indian investors who want to take exposure to these emerging themes has to look outside India for the investment purposes. So that is one major thing which, if Indian investors want to invest in, they have to look outside India, because in India, as I mentioned, it's only 3% of the global markets dominated by traditional industries. So that is one case, obviously, why we should look outwards also.
Sure. We'll talk more about the themes and what are the trends, but let me first ask Mr. Will Tu as to what is the reason behind ETFs being so popular? Why are ETFs so popular when it comes to taking exposure in the foreign markets?
I think we can think of it as 3 points. I think the first one, it's very transparent. Mm-hmm. So especially for investors, they are not familiar with foreign market. And ETF, it's extremely transparent instruments that they can get started with, which means that what's inside the ETF, each company, that you can analyze it, you can understand what are the ETF buying. And the second benefit is the efficient. So for example, like Siddharth just mentioned, if you want to get exposure to a certain sector, technology companies or certain country, it's very efficient to get exposure through the ETF. And the third one, it's of course the most important one, I would say globally wide ETF in general. It's a huge trend in investors' attention. It's low cost. So it's very transparent, very efficient for investors to build up their portfolio in domestic or in foreign exposure. And then with the low cost benefit, the investor can efficiently track or build a portfolio based on their requirement.
Sure.
Thank you.
So when it comes to cost effectiveness and all the other aspects, there are a lot of benefits. But Siddharth, tell us when it comes to getting the best of the global economies, there are so many. What exactly, in your view, are the benefits of investing in global markets?
So there are, in fact, one thing being that no one geography performs at all times. If you look at last 10-year data, you'll find that US markets has significantly outperformed Indian markets in several calendar years. In fact, if you look at global markets as a whole, if you look at MSCI world performance, it has again outperformed Indian markets in few of the calendar years. Mm-hmm. So if Indian investors want to diversify and look for multiple avenues of wealth creation, he or she needs to obviously look for other global markets also, because then only you'll be able to capture the performance of different markets in different period of time. Second, obviously, being, as I mentioned earlier, that there are several themes which are not available in India if you want to take exposure in those emerging themes. And these companies are present in India, just that they are not listed in India. So if you want to participate in emerging themes, if you want to participate in companies which are big in India but not listed in India, obviously you can invest in global markets, let's say in US and in Hong Kong, in other markets. And lastly, obviously, there's a question of diversification. If you look at global markets, they are very less correlated with Indian markets. So if you invest in different markets which are less correlated, your return to risk profile typically improves because of the diversification effect. And these are three major points why Indian investors now can look into investing in global markets. I think a lot of people are already talking about it, considering the performance which US markets, especially the tech stocks, gave in last 1 year. And that's why we are seeing more and more questions being asked about how can we take exposure in global markets. So people are already interested. I think we'll see more and more traction in these global funds.
Sure, Siddharth. And in fact, talking about diversification, could you help us understand what is the kind of impact does it have on returns? Like when it comes to diversifying the country risk, if somebody is investing in, outside India and in global economies like the US, how does it impact the returns on his portfolio?
Since each geography is performing well in different time frame, you are basically diversifying your risk. For example, in 2018 or 2019, if US markets were doing better than India, your wealth would have been generated more so from the US markets, and you would have diversified the risk of the Indian markets in that particular time period. And that is what investors gain if they are investing in multiple geographies. You simply not only are diversifying your wealth creation opportunities, but also you are distributing the risk in the multiple geographies, if I can put it in a very simple layman language.
Right, right. And before I go back to Will, there's one more question which is quite kind of related to it. What is the correlation of Indian equities, like when we talk about the global markets, and what does that signify?
So these are not obviously negatively correlated because we are talking about same asset classes. Some of the drivers at times are same. If you're looking at Indian equity market or US market, for example, Fed rate affects both to an extent. But even though they are positively correlated, the correlation between, let's say, a US market or an Indian market is 0.3. I think it may be difficult for retail investors to comprehend what 0.3 means. But in a very simpler manner, each of these markets, these geographies are impacted by multiple factors. Some of these factors can be common, but there are several factors which are not common. And that is why the volatility, the risk of these markets are different from each other. And because of this lower correlation, you obviously are able to have a risk at a lower level compared to if you would have invested in just one market.
Sure. Coming back to you, Will, tell us what are the latest trends which are being witnessed in the global ETF markets?
Okay, I think I can share with some trends that we have been observing from US and Europe and some of the activities that we observe in APAC. And it actually all depends on the local ETF market development. For example, in US, it's already very sophisticated ETF market. And on the shelf in the exchange, you can see pretty much all the basic broad market ETF, country-specific ETF, sector ETF have been listed. So currently, investors, they can actually construct their portfolio based on their country-specific preference, sector-specific preference, and market. And now the trend that we have been seeing in US is the thematic index, because nowadays a lot of investors in US specifically, when they construct a portfolio, they already have the core holdings, which is like the global equity market or emerging market equity exposure. But right now they want to go after some of the hottest theme or the trend in the market. So that's why we can see a lot thematic index like AI robotic, electric vehicles, autonomous driving, or even recently we had one client issue like working from home. So it's all go with the current trend, but that doesn't because that's the majority. No, the majority is still the core holdings, the S&P 500 or the Dow Jones or the broad market ETF. But I would say the trend right now in US, and now in last year, we see a lot thematic ETFs in Asia Pacific, specifically in Taiwan and Hong Kong. So these two are the most active ETF market. And you can also tell that they have been shifting from the original broad market ETF now to the thematic ETF. Yeah.
Sure. Coming back to you, Siddharth, well, a lot of questions I asked you, but then it's kind of related. The next question I want to ask is you that, when it comes to the emerging trends and the mega trends, how exactly kind of participating in these themes and in these trends can help the investors? How can they benefit?
So I think Will has already mentioned it that globally thematic ETF is the talk of the town in last 1 year or so, because ETFs provide a very simple and very focused way to invest in any theme. For example, if you want to explore cloud computing companies, investing cloud computing companies, ETF can be a very transparent, method-driven approach to take exposure in cloud computing. If you want to invest in, let's say, lithium batteries, because you feel that since EVs are going to do well, lithium batteries the companies which manufacture lithium batteries will also do well. So why not invest in companies which manufacture those? And that kind of focused exposure with known methodology at a very low cost is provided by these passive products. So investors who are keen to obviously take exposure in these emerging themes and different geographies, they can very well evaluate passive product, because as Will mentioned, first of all, they are available at a very low cost compared to active funds. Second, you get a very transparent exposure with a known methodology. And thirdly, global markets are very efficient in nature. It's very difficult to outperform the benchmark after cost. And that is why typically globally, that is why ETFs and index funds are doing so well. So again, it becomes a very, very compelling investment vehicle to take it in different themes and different geographies.
Sure. So Will, can you tell us the reasons behind thematic investing is getting popular, and what are the advantages which ETFs provide in thematic investing?
I think it's actually from two sides. From the investor side, it's very easy for them to understand what's inside the index, what kind of theme or what kind of investment objects that they are looking after. And this is actually, I would say this is actually similar to what one of the great portfolio managers that Peter Lynch, that he mentioned. You find your investment idea from your daily routine, your daily life. Right. I use this kind of mobile phone all the time. So you should actually look after, okay, is there any, is it a listed stock? So something like this, it's very, very popular right now. So not investing in some decision made by the managers that are run in the active funds, but actually investing in the theme that you feel that you use the tool, the product, the service on a daily basis. You are familiar with that, and you are confident that those companies will grow because you are actually happy with their service, their product. And that's why from investor's point of view, it's very easy to get familiar with the product, the ETF thematic index. And from the issuer, the ETF issuer, the asset manager's point of view, it's very easy for them to communicate the investment idea to the retail or to the investor. So it's two-way. I think why thematic index or why thematic investment is so popular right now, it's because mutually they can get the same picture. Because traditionally, if you look at active funds, the portfolio managers, they might have their own thinking, but the investor, they have very vague idea what's the decision made by the portfolio manager. And from the thematic index, previously, it's actually like smart beta or some kind of statistics arbitrage, this kind of thing, used to be quite popular. But from my point of view, it's like from the issuer's point of view, that's a very advanced product that they want to offer to the retail clients. But like I say, from retail investors' point of view, it's very difficult to understand. Just like what's diversification, what's volatility, what's all kinds of mathematics. But in thematic world, it's very simple to understand, and it's actually the product in my hand. So that's why I would say recent years, and I believe that will continue to grow in this area, because it's very easy for investor and the providers to build up new products that follow the development, especially on the technology side. Thank you.
In fact, Siddharth, talking about the thematic investing, tell us why passive exposure makes more sense here when it comes to global investing.
Yeah, so Will obviously has answered it somewhat, but to put it very simply, one is when you're talking about thematic investment, you know in what theme or in what idea you are investing in, right? And ETF, since it is based on an index, right? An index is based on a method which is very transparent. If you are investing in a theme via a passive product via an ETF, you get to know a very transparent and known way of taking exposure in a particular theme. And that provides a lot of transparency, that provides a lot of comfort to an investor if he's able to understand how a particular product is working and how this product will provide exposure to a concerned theme. And this happens in passive products at a very low cost. And cost, we have been mentioning again and again, it plays a very important role. Just to take a very quick example, in India, if you are looking at active global funds, their average TER is around 2.4%. If you're looking at active fund of fund, their average TER is around 1.9%. And if you add the underlying scheme, they will again be somewhere between 2.5% to 3%. But if you're talking about an index fund or an ETF, the TER is usually around, let's say, 50 basis point, 0.5%. From an Indian regulation point of view, it cannot go above 1% only. So you are saving this 1.52% of returns or cost by investing in passive products, products which is very obviously with a known methodology. So I think the benefit is already there. It saves cost, it provides you a known exposure, and theme is obviously about investing in an idea. And if you're comfortable how that investment is happening in that idea, you're more comfortable with that product. So that is why I think passive and index funds or ETF will be the way to take exposure in thematic investing going forward.
All right, so that, in your opinion, any concerns, any key areas which investors should keep in mind before they, invest in a global fund?
Yeah, I think obviously, first of all, and the most important thing is that the investment objective of the fund should align with the investment objective of the investor. Whether he wants to take a broad-based exposure or whether he wants a thematic exposure. Obviously, based on those decisions, the right fund should be chosen. Second, investors should always understand the risk associated with global markets, right? As we mentioned earlier, that different geographies perform in different periods, right? So it might be the case that you would have invested in a global market, but it performed poorly than the Indian market. So for that particular period, for example, the investment journey might not be as per your expectation. So you should always invest from a long-term point of view when you're investing in a global market, from at least, let's say, minimum 3-year horizon, and you should look obviously at a longer the better. And the third thing is obviously cost. You should focus a lot on cost. because as I said, the cost eats into your returns, and the funds which are available at, let's say, 2%, 2.5%, what benefit they are providing compared to, let's say, a fund which is available at 50 basis point of cost. So these are the three issues which investors should focus on. One is, as I mentioned, investment objective. Second thing is obviously the risk profile and the investment horizon. And the third thing is the fund of the cost. Uh, uh, Cost of the fund, sorry, whenever you are making the investment decision.
Okay, okay. So Will, that would be probably the last question to you, but I want to ask India specific question. What kind of demand are you seeing from emerging markets like India for global passive products?
Uh, I think it's actually repeating what Siddharth just mentioned in the beginning of the interview. It's actually through the ETF product. I think India investors, they can actually get exposure to global market, especially the US market, which is still the main driver of the global economy. So especially if you're looking at the past 1 year, 2 years, 3 years, it's actually a trend that you should not miss. And I think through ETF, that provides the great opportunity for India local markets that they can easily and cost efficiently to get exposure to those markets. And I think from Hong Kong, Taiwan experience or Korea's experience, the ETF market always start from the domestic one. But when the investors, they are familiar with the instrument, the ETF, and the benefit of using ETF, then the ETF issuers, they will be able to launch more global foreign market focused, which is what Hong Kong and Taiwan and Korea has been doing right now. It's launching new ETF that exposure to US market, Europe, or global or global thematic themes. So whatever you read on the daily newspaper, you will be able to find a corresponding instruments, financial ETF that you can invest in. And I think that's what I would expect India market would go towards that direction very soon, because I think right now it's already very packed in the domestic market. And I think foreign market actually provides a very attractive performance. And not just the performance, I remember 0.3 diversification correlation. It's actually a perfect diversification instruments to put in the portfolio. So I think that's the trend, and the local India market, especially investors, they should be aware of that to add those ETFs into their portfolio and enjoy the growth of the whole global economy. Thank you.
Sure. So Siddharth, I would like to ask, two questions from you. One is the kind of implications, like currency implications and tax implications. What are the implications pertaining to global investing, and also how Indian investors can buy and sell, because they're of course investing outside the Indian time zone. How would you answer that?
So I'll take the second question first. Regarding global investing, obviously investors can invest directly in stocks, but that goes through LRS scheme of RBI, and you can only invest, let's say, $250,000 a year in the foreign assets. But obviously it requires a large ticket size. The cost associated with direct investing in stocks is typically higher. And obviously you need to have a lot of expertise while you are buying or selling foreign stocks, at what level to enter and what level to exit. The second option is obviously through mutual funds. There are almost 46 active funds and funds which are available in the Indian market. Roughly have an AUM of almost 18,000 crores. Out of these 46 funds, I think 4 or 5 are index funds or ETF, which are relatively available at a much lower cost. So these are the avenues which again an investor can choose, either through an active mutual fund or a fund of fund which is based on a global mutual fund or an index fund or an ETF as an investment vehicle to take exposure in the foreign market. And again, the decision will depend on the investment objective uh, and on the cost of the fund. So that is basically the avenues which are available for Indian investor to take exposure in the global markets. Regarding currency, a good thing is that Indian currency has and probably will depreciate against, let's say, US dollar in the long run because of the differential in inflation and other factors. And this depreciation in INR also adds to the return of the investor. If INR has decreased by, let's say, 2%, you'll typically get a 2% additional return in your foreign investment. But having said that, that should not be the sole reason or major reason of investing in global markets. Obviously, it should be primarily driven by the fact that you want to take exposure in a foreign equity market, and that should be the something which you should base your investment decision on, while the currency depreciation add values for any investor. On the tax front, any foreign investment gets taxed like a debt. So if you are holding for more than 3 years, you get a 20% taxation with the benefit of indexation. But again, even on a, let's say, a post-tax basis, we are seeing that, let's say, if you would have invested in US markets in last 10 years, you would have generated higher wealth post tax compared to Indian market investment. So again, it depends on what sort of wealth creation foreign jurisdiction or foreign geography is doing, and how well it is comparing with the Indian equity returns. So even post tax, even with the benefit of let's say currency depreciation, you may get a return which is superior to Indian equity markets depending on the performance of the concerned geography.
Sure. So before we let you go, Will, any last piece of advice for anyone looking at ETFs for global investing?
I think I would highly recommend that all the investors that should pay attention to the ETF, because like the trend we have been seeing for equity ETF, the number shows in the past 10, 15 years, I think you can see major US pension funds and also global sovereign wealth fund pension funds, they have been migrating their investment from active funds, from direct investments, to the ETF. So even the most professional investors like them are using ETF as the major investment tool to construct their portfolio. And I believe India market would develop similar wide range of ETF selection for investors in local market. And remember, take the opportunity and enjoy the market, the global economy growth, and enjoy all the benefit like Siddharth just mentioned. Sure. It's cost efficient and also the currency, etc. everything. Thank you.
Thanks a lot, Will, on your insightful notes. And any closing comments from you, Siddharth?
I think Will has covered it very well. We know that foreign pension funds are taking exposure in equity markets increasingly through ETF. It's a very low cost medium to take exposure in broad-based market or in any particular theme. It's a transparent medium. It's a low cost medium. I think benefits are there for everyone to see. I feel that moving forward, we'll see more and more funds in the passive space, which will be based on foreign markets. Like Will mentioned, that first people are introduced with domestic ETFs, domestic funds, and then people graduate and AMCs graduate to foreign offerings. I think that is what we are seeing even in India, and I think going forward we'll see more attractive funds, or rather more thematic funds and broad-based funds based on foreign markets in India. I think they can be a very good vehicle for investors to take exposure in the global markets depending on his or her risk profile.
Sure. Thanks a lot, Siddharth, for this insightful discussion, and we'll bring more about ETFs in our upcoming series. Thanks for taking time out and participating in this session. Thanks a lot.
Thank you, Pallavi.
Thank you.
That's all for the second session on ETFs. We'll bring you more insights. Stay tuned with economictimes.com.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.